And joining us now on the debate for the full hour tonight, in Edmonton, Alberta, Wenran Jiang, political scientist professor at the University of Alberta. In the nation's capital, John Manley, President and CEO of the Canadian Council of Chief Executives, former Deputy Prime Minister of Canada. And here in studio, Cindy Todgham-Cherniak, trade lawyer with Lang Michener LLP. Dan Treffler, professor at the Rotman School of Management at the University of Toronto. And James Cowan, senior writer at Canadian Business Magazine. Good to have everybody around the studio. Dan, James, first time on this program for you, so it's nice to have you on. And of course, in our Points Beyond, Edmonton and in the nation's capital, it's good to have you two guests on the line as well. I want to start by reading a few charts here, the information of which I'm sure will be familiar to all of you, but let's go through this just so our viewers can know the basis upon which our discussion is happening tonight. Putting things in perspective, and these are the numbers out of James, your piece in Canadian Business Magazine. 73% of Canada's exported goods go to the United States. That represents 25% of Canada's GDP. Overall, only 2.2% of American economic activity is linked to Canada. Obviously, they're way more important to us than we are to them. Next chart, please. In December 2008, Canada exported $6.1 billion more goods to the United States than it imported. The surplus has narrowed by nearly $5 billion in less than 2 years, sitting at just $1.2 billion this July. Big change. And one more. In the same month, manufacturing sales overall fell 0.9%, while motor vehicle and paper sales, both heavily dependent on the U.S. economy, fell 8% and 5.5% respectively. Those arrows, obviously, are all going in the wrong direction. Okay, as we consider whether geography is our economic destiny, John Manley, let's start with you on this, because certainly when you were Deputy PM, Minister of Finance, Foreign Minister, these things would have all been very close to your mind, our trading relationship with the United States. The trend has grown since the Free Trade Agreement in 1988 and NAFTA in 1994, and I wonder, since the Great Recession, the significance of the American market to Canada, is it still growing and as big as it ever was?
Well, it certainly is very important to Canada. I think the statistics indicate that there's been some decline in overall volumes, not surprisingly, given what's happened in the U.S. economy. But I think a lot depends on the sector that you're in and what you're doing. Obviously, in the automotive sector, we have very highly integrated supply chains between Canada and the United States, both for the big three domestic manufacturers, but also for some of the transplants. Honda and Toyota both assemble in Ontario, others do in the United States, but parts go both ways. So that's highly integrated, and when the demand for automobiles falls, those volumes are going to fall in absolute terms as well. But I do think that for most Canadian enterprises, looking at a future-oriented growth strategy, while they'll still want to do a lot of business with the United States, they'll be looking for a growth strategy based on emerging markets, particularly in Asia.
Okay, more on that to come. I still want to go around the table, literally and figuratively, on that initial question, which is, we know how important the American-Canadian trade relationship, Cindy, has been for many, many years, increasing so under free trade and NAFTA. Is it, given that we're trying to come out of the Great Recession, is that still unambiguously where we ought to be looking for our prime trading relationship going forward?
Well, I agree with everything that John has said, and the United States continues to be an important trading partner. But when one relationship isn't working as well as it has in the past, and there's legislation that's tabled in the United States calling for the repeal of NAFTA in the United States, then it makes perfect sense for us to look at other opportunities elsewhere in the world, emerging markets and the Ukraine and the EU, et cetera, which is what the Conservatives are doing. It makes perfect sense to look at other alternatives.
And in fact, we've signed a bunch of free trade agreements and are still in the process of doing that right now, aren't we?
Absolutely.
Yeah. Okay, Wenran Jiang, how would you answer that?
Well, this is actually a good point. Even we're in difficult conditions, it's time to reflect on how we structurally have managed our relationship with the United States. We, in the past 20 years, we perceived that the free trade agreement will actually do good for us, which has done good for us. But we did not at the same time pursue other free trade agreements and strategies as aggressively even as the United States have done. So therefore, we're now facing an overwhelming dependence on the United States economy, that we should backstep and saying, had we done from 1990s, not only negotiating a free trade pact with the United States, which could benefit us at the good times, we should have prepared ourselves for the bad times by pursuing other opportunities. Now we're actually playing catching up, I think. That's the situation.
Dan Treffler?
Well, you put two numbers on the table here. One is we're in the midst of a massive recession, so bad things are happening, and those bad things spill over to Canada. That's going to boil over in another, say, 2 years, and we won't have to worry about that first slide you showed us. But what we do have to think about is what John Manley was saying, and that is long-term, the amount of trade that we do with the U.S. and its importance to our economy is declining. Why? It's declining because we're doing more and more with China. Question is that bad or good? In my view, I tend to be, I liked your introduction that this is about geographic determinism. We're stuck close to them, so we're going to have to trade a lot with them. If we move away from that and try and it's been very hard to make arrangements with other countries. I've been involved in the Canada-EU negotiations, writing a background report for that. It's very hard to crack open other markets that are sophisticated, markets that we really want to sell something other than oil and gas. So I'm sure we'll touch back on this again and again, but we should worry not so much about how much we're selling, but what is the structure of what we're selling. I liked your talk about a horse-drawn wagon, because that sounds like drawers of water and hewers of wood economy, which we are more and more becoming once again, which is, to me, just very disheartening.
Which is what we've been telling ourselves we can't be over the years. We've got to be value added. Okay, James, you touched on this obviously in your cover article not too long ago. How do you answer the question?
I think we have to be realistic. And of course, it's nice to diversify trade and reach out to these other countries and seek out expanded trade relationships with them. But if you look at the numbers and where we are in these various negotiations, the United States is still the vast majority of our trade and is going to be for a very, very long period of time. The EU, which is our second largest trading partner, is only 1/7, I believe, of what
1/9, I think.
or 1/9. Mm-hmm. It's minuscule in comparison to what we do with the United States. And furthermore, if you're looking to Asia, China, India, our trade negotiations there are in the earliest possible stages. We're not going to expect them to move quickly. And I think what you're going to see is even before those negotiations move forward, the United States economy will hopefully recover and we'll be looking back south of the border again, forgetting about perhaps this little burp that we've had.
That's an open question, because I think, I certainly took that from your piece, and John Manley, I'll get you on this, that in the past, America, you could always sort of set your watch to the fact that America would go into a recession, but then it would come blasting out of the recession, and we would certainly be carried along by that economic growth as well. That doesn't seem to be happening as forcefully or as strongly this time around. How many more gray hairs do you think Canadian business people have in their heads this time? Because frankly, the U.S. has not come blasting back as they have in the past.
Yeah, Steve, I don't usually talk about gray hair that much.
So I didn't mean that personally.
But I think a lot are seeing the need to have some diversification strategy. Now, if you're exporting natural resources, then it becomes a function of different things. First of all, you're probably selling into a global market anyway. In the case of our gas and oil, there's a tendency, of course, to ship it by pipeline. So if you don't have a way to get it to the coast and into tankers, you're pretty much bound to the U.S. market. In the case of our manufactured goods and services, those are whole different markets. Manufacturing, of course, tends to be increasingly integrated with supply chains elsewhere. And, we have this image, I think, of trade being, we make it and we sell it over there. That's just, it doesn't happen like that anymore. We may design it, and they may make components over there and other components over there, and at the end of the day, it's assembled perhaps in a different place altogether. So what I think Canadian businesses are increasingly realizing is that to be competitive, they have to be having a totally global outlook. The U.S. is still, for our lifetimes, going to be the largest market in the world for goods and services and natural resources made in Canada. But supply chains are getting a lot more complex, and if you want to be competitive, you need a global outlook, and that does give, I think, some of our CEOs gray hairs.
James Cowan.
Perhaps the prime example of that is something like RIM and their BlackBerry. The conference board just put out a report which illustrated that while the technology in the BlackBerry is sort of a Canadian success story, in terms of the actual manufacturing for it, it's done in Mexico and over in Europe. Mexico for the North American market and in Europe for the Asian market. And when the BlackBerries actually start moving, you see it moving out of, I believe it's Hungary for the European manufacturing into Asia. That's counted as a export from the European market into the Asian market. And of course, there's a Canadian contribution into that, but it's not recognized in the overall figures. And so if you're looking at what's going on within the trade, it is so integrated that sometimes the actual trade numbers themselves don't reflect that.
Well, that's interesting. So should we not be sort of too dismayed by the fact that our trade numbers may not be as strong as we want them to be because so much of this is so integrated and so international it doesn't give an accurate picture?
Well, I think trying to keep track of where our money is going and where our money is coming from is exceptionally important, and you need to actually know where the stuff is going. And I think there are people calling, the Conference Board of Canada being one, calling for us to start to try to keep more accurate statistics and more accurate reflections of actually how this global marketplace that Mr. Manley was talking about is actually happening.
Cindy Cherniak.
And when you look at free trade agreements, you have a trade in goods component, but you also have a trade in services component. And what we're not tracking as well is trade in services. So when we are missing some of our trade in goods, as was just discussed, but we're also missing a large part of our economy, which is the trade in services, because we focus too much on, we focus a lot on manufacturing because manufacturing is important and the manufacturing base has always been important and will continue to be important. But we also have service providers now branching out all over the world.
Okay, if we could tell that story, what would that story look like?
Well, I think that story would look like we are engaged in a lot of activity worldwide, and that's where some of the free trade agreements that are being negotiated are going to liberalize trade and services to make the laws in other jurisdictions more favorable to Canadian businesses who provide services, either providing services to those locations or within those locations, setting up their own offices and using that as a hub for further trade and services within a region that is further away.
Wen-Ren Jiang, could I get you to follow up on that? If you were to include the trade and services provision of this story, what might that story look like, and what kinds of services, for example?
There is absolutely a necessity for us to speed up the institutional arrangement and regimes for trading with other countries. We actually speed things up very quickly back in the late 1980s for the free trade agreement. I do not see why we cannot do so with other countries. It's all about human efforts. Now we're lacking those frameworks. Back to the story about what just we discussed about all these globalized manufacturing chains and division of labors, which actually shows that we cannot be satisfied and depend only on the free trade agreement with the United States. We need to pursue multiple dimensions and multiple partners, especially with China and India. I'm sure actually if we do so in our lifetime, we could actually catch up. I have to alarm you and the rest of our audience that U.S. is in structural decline. This is not a temporary thing. We're thinking maybe after 5 years, we're back into the 1990s prosperity of the United States again. U.S. is facing serious problems domestically, trade-wise, with a twin deficit of international trade and this budgetary situation, the large amount of debt ratio to GDP. These are not good things for Canada. So a diversified world for Canada now is to look beyond the United States, and we need to take action, not only by the government, but also by trade organizations and the private enterprises altogether.
Dan Treffler.
I'm just reminded now of a wonderful Margaret Atwood quote when in 1984, as we were negotiating a free trade agreement with the United States, she said, and U.S. was in structural decline then.
So you're not buying it, is what you're saying?
No, I'm not buying it. And what she said was, if I had to get into bed with some trade partner, it wouldn't be the United States. Well, I would almost say the same thing with China today. China has its own set of structural issues. I think the U.S. is a dynamo when it comes to innovation. The rest of the world rides its coattails. And that's the person who I choose to be in bed with if I had to choose monogamously. Of course, I wouldn't choose monogamously. But to come to...
Trade is, sorry, just so we're clear here, trade is one of those situations where monogamy is not necessarily a good thing?
Absolutely not.
That is the case. Okay. All right. You want to follow up?
So Cindy made an excellent point, but we run a little bit of a risk. The question about services and the question Jim mentioned about how do we track the supply chain. Well, certainly if we just looked at services, we'd see a picture which is a little bit similar to manufacturing, unfortunately, which is we're running a slight trade surplus. We do some things really well, things like companies like Manulife. We are selling insurance and pension products in East Asia. Our companies employ 500,000 people abroad. So we're doing some wonderful things. But when you really analyze it, you see similar to what we see in manufacturing, which is we're really specialized in some of the lower end elements of services. The really good stuff like management and consulting services is not our strength. Where there's some niches like engineering we're good at, but overall, it's a very mixed bag, just as it is with manufacturing. So,
I was just going to say, I want to put this to John Manley, because the headline on James's piece was, "Is America dragging us down?" How would you answer the question?
Well, no, America is having a slow period, but America still accounts for, as you pointed out at the outset, the vast majority of our exports, and that means many, many jobs in Canada and a lot of our GDP. So, no, it's thank goodness we live next door to the United States. It's the largest, even in decline, it's the largest market on the planet, and will be certainly probably for the next 50 years anyway. So it's not dragging us down. But I think we have to recognize that we've come off a period where very rapid growth in the U.S. was something that we had accepted as kind of commonplace. And we roared out of the recession of the early 1990s with sustained economic growth in the United States. Of course, our businesses didn't look for other export markets. Everything that we could produce, our entire capacity could be absorbed in the United States. What could be easier than that? Same language, same time zone, same legal system. So I wouldn't say they're dragging us down. I think what they're doing is they're giving us an opportunity to look for diversification strategies while we still have right in our pockets such a wonderful market as the United States.
Cindy Cherniak.
I think I'd phrase it more as a but-for analysis, that but for the difficulties that the U.S. is facing, we would be doing better vis-a-vis our relationship with the United States and our trade and our manufacturing. And but for the protectionism in the United States, our manufacturers would be selling more into the United States. But for Buy America, we would have more opportunity. And as John Manley has said, because they're having difficulties, we are looking and taking advantage of the opportunity to diversify.
Let me put that the Buy American aspect of it. We should follow up on that to Wenreng Jiang. Right. That is, the American Congress, obviously through its whatever it turned out to be, $800 billion plus stimulus package. Part of that deal was that money had to be spent on purely American, at least that's what they wanted, purely American products. And naturally, Canadians raised hell when that happened because we wanted a piece of that action as well. What has been the impact on Canada of that Buy American provision?
Well, clearly it's negative. Free trade agreement is all about integrated market. But it is also normal that when it's in tough times, countries turn into protectionist. People learned a lesson now a lot better than back in 1930s. But still we see all this trend of Buy American clause. And by the way, the Chinese have a big stimulus package, by far the largest percentage of any country's GDP. They also have some kind of clause in that nature. And they're all trying to find ways of benefiting their own growth and job market. What's lost in the bigger picture, Canadians will argue, which is also true, that when you install protection measures such as Buy America, it actually does not benefit them. It hurts them. The free trade regime overall is weakened, and we suffer from that process. But what Americans have done is they're doing free trade agreement with Canada, with Mexico, but over the years, they have pursued so many other bilateral arrangements with other countries far more aggressive than what Canada has done. I think we're lagging behind in that regard. I would say, yes, America is a great market. We hung on to it for a long time to come. But at the same time, diversify and pursue others in a vigorous manner.
Dan, it seems that the Buy American provisions were aimed, in the main at countries such as China and not necessarily at us. But Peter Van Loan, the minister in Ottawa, keeps saying you guys are aiming somewhere else, but you got a lousy aim. You end up catching us. Are we collateral damage to this kind of thing?
That's exactly the terminology I would use.
Yeah.
Yet again, we are collateral damage. We are collateral damage in the great agricultural wars between Europe and the United States. We can't sell our wheat abroad because it's being subsidized. Exports are being subsidized by those two giants. Now we're collateral damage on a huge steel surge on the part of China into the United States. Got what I call the rusting of NAFTA's nuts. We got caught because they're worried about Chinese steel imports, and we're stuck trying to ship into the United States at a time when they're trying to keep the Chinese out. And the biggest collateral damage, to my mind, is the exchange rate that the United States needs to devalue big time against China. China refuses to let that happen. They've devalued 1% so far in their grand plan to devalue, to revalue. The Chinese are not doing their job to allow the U.S. to become more competitive through the exchange rate. So the U.S. has to adjust somewhere. Where are they going to make the adjustment? They're going to make the adjustment against Canada. They're going to devalue against us. We're again collateral damage.
I always wonder, John Manley, maybe you can help us on this. I always wonder why it is that we seem to see this movie every 10 years or so, where the Americans, need to do something domestically, and therefore they do a Buy American provision or something like that. And they always say, well, we didn't mean to include you Canadians in that big net, but they do. Why do they always forget about us when it comes to these kinds of measures?
Steve, every 10 years. I'd have thought it was a lot more frequent than that.
Okay.
It seems all the time. But, partly because, truthfully, although we are important as importers and exporters with the United States, more important to them than they sometimes realize. And I must say, I think more important than your initial slide suggested. Still, we are not China, we're not Europe, and we're a bit of an afterthought. Many times, they don't even think about us as being a factor. They almost think of us as already being fully integrated into the United States. Occasionally, they take cognizance of that. For example, a couple of years ago, in a steel battle with Europe, they imposed anti-dumping duties on European steel. They exempted Canada and Mexico, a recognition of the fact that the steel production market in North America is already highly integrated. And so they exempted us. Now the WTO struck down those measures. So occasionally it works. But I'd have to say, looking at recent political rhetoric, not just in the last campaign for the Democratic nomination in the United States, but more recently in the Ohio gubernatorial race going on right now, we've had a lot of rhetoric that's targeted NAFTA, and even according to the current governor of Ohio, Canada is sucking jobs out of the United States. So I think we do need to worry not just about collateral damage, but we need to worry about the fact that there doesn't seem to be at a senior political level in the United States of America today anyone that will champion free trade and liberalize trade the way that George Bush Sr. did it, the way that Bill Clinton did it. We don't have anyone, I haven't had for some time, anyone to stand up to say to Americans, this is in our interest to have liberalized trade around the world.
Just follow up on that, John Manley, if you would. Why not?
I think that we've seen the debate slip away from free traders. It's become, to some extent, popularized in the U.S. media. Lou Dobbs on CNN ran vitriol and falsehoods about free trade for years, and it's picked up in the talk shows across the country on radio. Let's face it, I mean, we saw it in the Great Depression. At a very simplistic level, it's quite easy to say a trade is bad. I mean, let's protect ourselves. That led to important legislation, Depression-era legislation in the United States that seriously exacerbated the problem that the world had in the Great Depression. It's instinctive. It's not intuitive at all to believe that freer trade is actually good for both sides in the arrangement. And I think that in a very polarized and very tight political situation, somebody's going to seize that initiative and try to make political points by attacking trade agreements. There's no such thing in a populist mind as fair trade. It's always unfair.
Cindy Cherniak.
And what's really interesting, along with what John Manley just said, is a free trader out of Ohio, Betty Sutton, has tabled a bill in the U.S. Congress called the Foreign Manufacturers Legal Accountability Act of 2010, which will require every foreign manufacturer, not excluding Canadians at this time, to set up a representative office in the United States. And if you don't set up a representative office in the United States, then there is an import prohibition, and you can't export your goods, or they can't import your goods. Now, this is in response to the Chinese drywall situation from a couple of years ago, so we're collateral damage there. But even a free trader is tabling legislation that is extremely protectionist and arguably contrary to NAFTA and a number of WTO agreements.
Just follow up on that. What's the Chinese drywall situation you're referring to?
There was Chinese drywall imports into the United States which became toxic, and it was more in Florida and some of the southern states when it got wet, and there are all kinds of product liability claims in the United States at this point in time, and it must be that there is difficulty suing anybody at this point for the aggrieved parties to recover.
Wenren Jiang, from your perch in Western Canada, does it appear as if the Canadian government is doing anything to either make its case more forcefully or reduce the trade barriers or the trade irritants between Canada and the United States right now?
Well, the government at both federal and provincial levels have been always working on these issues. This organization called PANWAR, Pacific Northwest Economic Region, every year they meet at summit, 5 U.S. Western, Northwestern coastal states, 3 Canadian provinces. Every time, both sides, ministers, federal and provincial, coming together, big 2-3 day summit, talking about border issues, simplified procedures to ensure the free flow of trade and bilateral economic activities. We are not lacking mechanisms, but there are some structural issues are really preventing things from happening. And now people began from the West, I can see from the energy industry, resource industry, began to say, if there are so many problems and barriers and difficulties, we'd better begin look somewhere else across the Pacific especially. We can see since 2004, I have organized an annual Canada-China Energy and Environment Forum. From last year, clearly all the producers, CAP, Canadian Association of Petroleum Producers, have been on board. They're coming to the conference. They're going to Beijing later this month with me for the annual conference there. There's a major energy presence. They're basically saying the south of the border is good with all the issues. We also would like to go beyond that to see new market alternatives. I think that's important, to see the alternatives.
Right. James Cowan.
And I think when you're talking about U.S.-Canada relations, you have to remember that from the Canadian perspective, we're dealing with a bit of a 1-2 punch here, in that for the the first 5 years of the 2000s, we were dealing with security concerns coming after 9/11 and concerns about the border. And then once we seemed to actually start making some progress on those, we suddenly hit the economic concerns that we're now dealing with. And so in some ways, our neighbor to the south has been scared of something for the last 10 years or so. First of all, it was they were scared of the very valid security concerns. Then they were scared of other people taking their jobs. And so in this climate of fear, it's very hard to make a rational argument for open trade.
All right, let me follow up with Dan on that. And I'm going to the recesses of the back of my memory here on this. I can remember having heard a story, I think it was on Sunday morning on CBC Radio a couple of years ago, where they went down to and I think, John Manley, apropos of your comments about Ohio, I think it was a Caterpillar factory in Ohio, which relied on Canadian business in order to survive. But with the Buy America provisions, they weren't going to be able to do any Canadian business. And as a result, this factory was going to go out of business in Ohio. American jobs being lost because of the Buy America provision. Why do they down there not get that those Buy American provisions can cost American jobs as well as secure American jobs?
I'm not the best person on political economy, but in broad historical perspective, used to be the Democrats were very pro-free trade. They understood that there was poor people out in the rest of the world and we had to help them by buying their goods. Sometime in the 60s, the Republicans and the Democrats switched shoes, and it's now the Republicans that are the free traders. We've got Obama, I have great respect for the man, but he has some difficulties understanding, we saw it in his campaign, understanding what free trade has done for the United States, what NAFTA has done for the United States. I think at this point it's just one of the few things that I fault the Democrats on.
Okay, I need a former politician to explain this to me then. Okay, Deputy PM, formerly, come on in here with the answer to this. Why is it that Canadians, and I think the poll said before the last American presidential election, 85%, maybe 90% of us would have voted for Obama over McCain or the Republicans. And yet the Republicans seem to be the party that is far more interested in freer trading anyway, and the Democrats are far more protectionist. Why do we apparently like the party that actually is worse for our particular interests?
Well, because when when people answer that question, when a pollster calls them, if you had a vote in the United States, who would you vote for? They don't think about themselves as Canadians or what would advance Canadian interests. They think about what are the values that we share. And I think that, Barack Obama energized the entire planet with his, the differences, with his demeanor, with his intelligence, with the fact that he meant a clear break with the past. George W. Bush was not popular in Canada, and it had a lot to do with his foreign policy and not a lot to do with his trade policies. So I think it's just a differentiation. I think that's not how people answer the question. But I think truly, when you think back, Bill Clinton, elected in 1992, found the NAFTA treaty in Congress, something that had been initiated by his predecessor, George Bush Sr., and he took it on, he fought for it. And it would not have passed the U.S. Senate without the support of the Republicans, but he got enough of his own party and he stood for it, he supported it. That kind of political courage is not that common in any country, and it's something we should still honor Bill Clinton for.
In which case, let's move into sort of the next segment of our discussion here, and that is if, as we have been trying to do, it seems, for the last half century almost, if we are looking for other wagons to which to hitch our horse, for all of the reasons we've been talking about that make the American wagon kind of sometimes an uncomfortable fit for us, where should we be looking? Let's go around the table on that. Okay, Dan, start us off. Where should we be looking if not the U.S.?
There's 2 points, but let me give you just one of them. Stop thinking about geography, stop thinking about what region, and start thinking about what goods we produce. And I've touched on this before. What we need is markets that are pressuring our firms to provide innovative, high-paying jobs and which are providing us the support for that. So we need market access agreements that allow firms, Canadian firms, to have the scale of operation to be producing enough goods and selling them that they can afford to do research and development. That's Canada's biggest problem right now, is that our firms are doing far too little R&D. We're the laughingstock of the OECD on this. So we need to think about access, not to a particular region, but to places that are going to buy our RIM products.
So make a list, for instance.
So clearly the United States on the high-end stuff is where we have to be. The other place obviously is China, but with some cautions here, that we want to be in China on our terms. Canada can't dictate terms.
Who's in China on their terms?
Right, exactly. China cannot dictate terms to China. Canada cannot. But so somewhere along the line, the major players in the OECD, which is Japan, Europe, and the United States, are going to have to figure out how to coordinate on gaining appropriate market access, making, I hate the terminology, level playing field, but an environment in which we go in with our high technology and we're not seeing our intellectual property stolen from us.
Okay, Wenren Jiang, if not the United States, where do you want us to look?
Well, we look at where the growth comes from in the global economy. If you look at the past 10, 20 years, the global growth contributors are China, India, Brazil, to a certain extent South Africa, Russia, and the African continent as a whole is coming up very strong. So therefore, I would say go to select a number of these countries. But as we have discussed so far, you cannot just pick 1 or 2 other single countries to say that's where we go for. If you look at the diversified, the globalized, division of labor, the chain of, manufacturing, we talk about BlackBerry. There are studies shown that the Chinese are doing iPod, great American innovation, but you know where it's produced? Southern part of China. iPod, where all those value-added thing coming from China? No, only $4 per iPod that is being earned and added by the Chinese. Everything else, parts coming from the rest of the world being assembled there and then selling us in North America and all over the world. Can we do that in the BlackBerry case? Can we do that in the automobile case? Because China is already now the largest auto producer in the world and the largest market in the world. It's growing faster. Remember this, China has 4 times of the US population. Now, if 1/4 of them is as rich as the middle class like the United States, we'll have a comparable market like the United States. And now only 0.33%. Let me repeat, only 0.33% of Canadian foreign investment last year has gone to China. About 1% of China's foreign direct investment last year overall came to Canada. That margin is just too small, and we need to do a lot more than that.
So, Cindy, that suggests we're just not players over there, and all this talk, as we have been for 50 years, about finding an alternative to the United States. I mean, is it on, or are we just smoking?
I actually think that it is on, and the Conservative government is currently looking at Turkey. We have, but what have we done recently? We entered into a free trade agreement with the EFTA countries. We've entered into a free trade agreement with
EFTA countries is what?
Iceland, Liechtenstein, Norway, and Switzerland. We've entered into an agreement with Peru, with Colombia, with Panama, and we're talking to the Caribbean countries. We're talking to the C4, which is Honduras, Guatemala, Dominican Republic, El Salvador. We are
Got Chile and Jordan on the list too, don't
and
we?
we've got Jordan. Chile was a long time ago, around the time of NAFTA. We also have, we're looking at Japan. We're looking at Ukraine. We're looking at India. So we have a fair number of countries that we're looking at. While Brazil would be a nice opportunity, Brazil hasn't entered into many free trade agreements with anybody. They're only in Mercosur. So picking us first, I don't think is necessarily in the cards. Argentina isn't on our current list, but would they be possibly a good market for us? And what about Cuba? We have a lot of Canadian interest down in Cuba, and Cuba has some of its own issues, but is that an opportunity for us? And the list can go on, and we're entering into foreign investment protection and promotion agreements with a number of countries where our mining interests have their focus as well. So we actually are doing a lot, and there are other opportunities out there.
But John Manley, tell us this, even if we exploit all of the potential opportunities that Cindy's list here suggests, this is going to be, well, I shouldn't say it. Let me ask you, does this amount to more than just the pimple on the back of the elephant? It's not going to change the fractions dramatically compared to what we already do with the United States, will it?
No, I think that's correct. But I think what I would go back to is let's look at the composition of what we're doing in Canada and how we want to advance our interests. And I'd say a couple of things. First of all, I'd say we should be looking at our natural resource sector, particularly oil and gas, and we should be building a pipeline to get those supplies to the West Coast where they can be put on tankers, and we have an alternative market to the United States. That's point one on that sector. We've been talking a lot about BlackBerry and RIM this afternoon, and where it's all put together or designed and all those things. The key to RIM is intellectual property protection, and we're a small player. We need to be seeking and achieving the gold standard for intellectual property protection around the world. We need to be very aggressive in our legal systems to protect our IP, and we need to be very aggressive in investing in the kinds of educational institutions that can produce more of it. We need to see Canadians as being able to mine not only what they find under the ground, but what's between their ears. So we need, I'd say, a global intellectual property strategy. And I would overlay that with the kinds of things that Cindy's been talking about. In other words, lots of bilateral arrangements. Let's not forget about the WTO and trade arrangements internationally. Markets will emerge, and Canadian enterprises will find them, provided we put the proper framework in place. I wouldn't say should we unhitch our horse from the U.S. wagon. I'd say let's create a wagon train here. Let's keep that wagon hitched to our horse. Let's see if we can add a few other wagons onto the back of it so that we build a prosperous future for our country.
James, can we find that other wagon he's talking about?
Oh, I think we're actually pretty close to finding at least one more wagon.
Well, who's it hitched to?
I think Europe is our next best bet, and while it's far smaller than the United States, it's also our second largest trading partner. We're in fairly good, fairly strong trade talks with them right now, and I think we're looking at within the next year or two, perhaps signing some sort of formalized trade agreement with the EU. If you're looking at things like China, at India, those are far down the road, both in terms of the economies developing so that they can take the kinds of products we want, but also in terms of working through the deep bureaucratic problems that are involved with dealing with nations such as that. Europe is not close geographically, but in terms of the kinds of consumers they offer and in terms of the kinds of products they want, a lot closer than any of the emerging economies.
Dan, what do they want from us?
They want three things. They want procurement at the Ontario. They want access to Ontario and Quebec in terms of their procurement policies, government procurement policies. We can argue till the cows come home about whether that's going to be good or bad. The other one that's a no-brainer for us is that they want labor mobility. They want free flow of people. That's a no-brainer. We've got to do that. And the last one is trademarks, champagne, and so on down the list, which I don't understand how that even got on the list. It so misses the point of what these agreements are all about, which is trying to push us to work harder on more innovative products. That's where we want to be with Europe. We want to be innovative. Europe provides us with a demand for those innovative products. We want to be doing our FDI there just the way, say, Bombardier is doing. Sounds like a beautiful situation.
Well, let me find out from Cindy. You a bull or a bear when it comes to formalizing some kind of trade agreement with the European Union?
I think it's a great idea, but I'm cautiously optimistic. I think that there are a number of hurdles that still need to be overcome in those negotiations. We're going into, the fifth or sixth round of the negotiations, and I think there's some big ticket items still on the table where it's going to be a tough negotiation to get those issues resolved.
Let me try this. Wen Renjiang, to you. We constantly are told in Canada that our very multicultural population gives us a leg up on the rest of the world. Our large Chinese-Canadian population, for example, gives us a leg into China. Our large South Asian, Indo-Canadian community, for example, should give us a leg up in doing business in India. The numbers suggest, though, that we're barely scratching the surface, certainly relative to our trading relationship with the United States, but even, our trading relationship with the Chinese has barely budged the needle at all over the last decade. So is this true that our multicultural population gives us this leg up on everybody else?
Well, we do have all these human capital of ethnic Chinese, Indians, connections are there. They are a condition, but not sufficient enough because we do not utilize them as much. I don't know how many Chinese or Indian origin executives or facilitators, for example, Mr. Manley's council is using. We are underutilizing our human capital, therefore, even they're there, they don't translate into necessary numbers in terms of growth in economic activities. In the past 10 years, that is the first 10 years of this century, from 2000 to 2009, Canada's trade with China, India, and Russia combined at a growth rate of annual 4%. That is extremely low. We're losing market share in terms of proportion because these countries are growing very fast. We're talking about China and India, trade growing by about 15 to 40% to other countries. Talking about opportunities, for example, we do not tap into the Chinese investment. We have a problem with potential Chinese investment. China has done tens of billions of dollars of deals with Brazil, with Russia, with Kazakhstan, with Venezuela, you name it. Yet with Canada, with this kind of resource and energy base, the largest investment so far was the recent $4.6 billion takeover of the Sinopec in the Syncrude. It's not even a new investment. So we're looking at a very, very small scale activities between Canada and these countries, and I do not see a lot of movements of utilizing our well-endowed human capital and connection with these parts of the world.
I should give John Manley a chance to respond to the issue you raised in that answer there, Wen Renjiang, which was, are those communities well enough represented on your organization, Mr. Manley, as to be, more effective for our potential trading relationships with these other countries?
Yeah, no, I would say that that's not the case. That my council is generally, well, is entirely large enterprises, and I don't think either particularly Asian representation is very strong at a very high level. It's coming up through organizations, and it's growing. But I think from my past experience in the SME sector, there's a lot of participation, both going into South Asia, into particularly into India, as well as into China, by Canadians of Indian or Chinese origin, but mostly with SMEs. And I think it will come over time that large enterprises, likewise, certainly large enterprises are active in those markets, not as much as we'd probably like, especially the financial institutions are there. But it's taking time, and I don't think we have leveraged our human resource capital very well in that respect.
I'm pretty good on acronyms when it's like NHL or CFL, but SME, you want to tell us what that is?
Sorry, small and medium enterprises. So it's the small business and medium-sized business sector, not companies that I represent, but certainly companies that I worked with a lot in my years as industry minister and foreign minister.
Gotcha. Cindy Cherniak.
And I look at it from the perspective of free trade agreements. And when you look at India, when you look at China, and let's add the Ukraine in there as well, because we have a large Ukrainian population in Canada, we don't have things at the WTO that we'd like to have. All three of those countries are not members of the Agreement of Government Procurement. Both of them have high MFN rates, so it's costly to import a Canadian good into those jurisdictions. There are large duties that are on those goods, which make it less competitive in the developing country marketplace. And their schedules to the agreement relating to services, there aren't as many services scheduled, so we have limited opportunities in those markets. So if we go to a bilateral agreement, then we would liberalize our trade, and the duties would go down to zero over a period of time, and additional services would be scheduled. So there are reasons why our numbers are poorer into those jurisdictions. It's not just not having a large population. We need to have the right climate in that foreign jurisdiction, and we don't necessarily have the right climate in that foreign jurisdiction.
Okay, 5 minutes to go here. Let's do a little crystal ball gazing. Dan, who's our biggest trading partner going to be in 50 years?
United States.
Still.
Still. Can I say one thing, though, that's really bothering me? We keep ignoring the fact that we're trying to expand our markets to countries that want to buy our commodities. We don't think about this is not what gets us high-value jobs, and it's what creates an enormous amount of pollution in this country. I don't see how we can just ignore this. This is a major first-order issue. Do we want to just expand trade for the sake of having large numbers on the board? I don't think so. We want good jobs, and we want a society which, there's broad-based prosperity, and there's an environment that we can sustain into the future for our kids. That's got to be in this equation. When we talk about willy-nilly, let's just expand and expand and expand trade to countries that want our commodities, we're missing something very important. I had to say that.
I appreciate you getting that on the record. Okay, you still say the United States. Wen Renjiang, 50 years from now, who's our biggest trading partner?
Well, I think the United States will be, but China and India will follow very closely. Look, I want to go back quickly to the idea that maybe we're closer in institutional terms with Europe, therefore that is a natural partner of the next in line. That's not true. Europe is not where the growth is. Europe has a hard time now trying to dig itself out. Chinese Premier Wen Jiabao just went to Greece, gave them all the assurances of buying their bonds, and then gave them $5 billion of credits to buy Chinese products. We have to look at where the growth engine is. And in terms of these growing markets, we're not looking at just them coming to invest in energy and having environmental damages. In the annual Energy and Environment Forum I organize, many Canadian firms explore clean energy. Westport Innovations has a major presence in China, converting gasoline engines into natural gas. We need to support that kind of tech value-added markets and to the Canadian business into those areas.
You're singing
and
from
that's
the
where
Dan,
the growth engine is about.
You're singing from the Dan Treffler hymn book right there. James Cowan, the year's 2060. Who's our biggest trading partner?
I think it's still going to be the United States.
Still 3/4 of our stuff?
Perhaps less than that, but not. I would be willing to bet not a whole heck of a lot less than that. And I think what we're going to see in the next few years is perhaps nothing as big as free trade or as NAFTA, but we're going to have to start seeing some agreements being struck, some finding of middle ground between us and the United States and dealing with their protectionist tendencies. A very small example, in Canada, it's mandatory to have running lights on your car. In the United States,
have which?
Running lights.
Running lights,
on
okay.
your car. In the United States, it's mandatory to have an airbag in your car.
And not in Canada.
And not in Canada. Little change like that could make a big difference for one of our major industries. I think those are the little fine details that aren't particularly exciting, not particularly sexy, but those are the small places where we're actually going to make some improvements in the next few years.
Cindy, United States going to represent 73% of our trade in 50 years?
Probably not 73%, but the U.S. will always be an important trading partner, and they'll still be the captain of the trade team in the future. But there will be more convergence of our regulatory regimes. We are going to evolve that relationship in the next 50 years, and we are going to add other players to this team. Who they may be, you know, I can't really say. I've given you a list, but I think that it will continue to evolve more than one relationship, but the U.S. will still be very important.
And John Manning, let me give the last minute to you to not only speculate on who our #1 trading partner is going to be in 50 years, but to answer the question we've been sort of kicking at for the last hour or so. Is geography our economic destiny? Go ahead.
Question number 1, yes, it will be the United States. Prediction number 2, we will still, 50 years from now, not be very good at figuring out the composition of all of the trade components. We won't be good at measuring services. We won't figure out how supply chains operate so we can get a good calculation. So the numbers will still reflect commodities, goods, more than they reflect the real nature of trade. I think that as we go forward, we're just going to find that the world is a much more complex place, and that for Canada, we really need to make sure that we invest in our human capital to the best of our ability. That's what's going to make us prosperous.
Dan Treffler, in that last cri de coeur a moment ago, has given us an idea for a very good program. We got to revisit that idea, and we should have you back on to talk about that, because you're right, that's an absolutely important topic that we should get to. Okay, let me thank everybody for being on the program today. Wenren Jiang, the McTaggart Research Chair of the China Institute of the University of Alberta. John Manley, the former, boy, what a resume, Deputy Prime Minister, Finance Minister, Foreign Affairs Minister, Industry Minister, now the Canadian Council of Chief Executives. He was in our nation's capital. Michael, where am I going next? You cut the shot? Okay, there we go. James Cowan, the senior writer of Canadian Business Magazine. Cindy Todgham-Cherniak, counsel in the International Trade Law Department for Lang Michener. And Dan Treffler, professor of business economics at the Rotman School of Management, University of Toronto. Thanks, everybody.
Thank you.